5th of June, and yesterday was a bit of a wipeout for me and us in the stock markets. I really did not expect this huge 2% rally, I think it was. It was all on the back of the Fed talking about a rate cut, which to me seems insane. All we've done is retest the March low, so in 1 month we wiped out 2 months of gains. Hardly a major problem, especially after we just hit a new all-time high at 29.61. Hardly a crash, and the Fed are already talking about cutting rates. Well, I didn't see it coming. I think it's insane, but you can't fight the market. So stopped out of our shorts, and now, would you believe, the price of the S&P index is actually trading above the 100 moving average again, and the neckline to the head and shoulders 28.10. I believe we've been up to 28.13. So now I don't know what to do. I'm going to have to sit and wait. I really don't believe that this can possibly be a resumption of the bull trend. But there we go. This is a trend line to rely on. I don't have the balls now to sell this at 28.13. I think it's just too uncertain. But it all depends on that level, I would suggest. So we start getting up through 28. Well, if we start getting through the 28 teens, 13, 18, then I'd suggest this looks pretty positive. The stochastics are turning positive at least. But as I say, I'm just going to have to wait for the next signal now. I don't know what to do. Nasdaq, which got walloped this week. Just going to throw some fibs on here. Okay, less of a bounce back, comparatively speaking, to the E-mini S&P, because we've only beaten the 200-day moving average. We haven't got back up to the neckline. So this will be strong resistance if we get up to sort of 72, 75, 72, 80. Well, I think the trend line's around 7,300, so you can see that sort of by the time we get there, 7280, 7300 is going to be the critical resistance level. Now Dow Jones is right back up to the high of the 29th of May. So we're retesting the red 200-day moving average, having moved back above the neckline to the head and shoulders. So again, this is just confusing me now. I haven't got any solid trade idea for this index. We're just going to have to see how it develops. Dollar index is lower. So now we are just holding on to the 100-day moving average at 9700, call it. As I said yesterday, 9700 is going to be key, but we have broken quite important trend line support. Remember this trend line that I showed you yesterday? This goes back to Feb 18, so it's well over a year old, this trend line. And I do think that holding below there is more important than the 100-day moving average. So what I'm saying is holding below sort of 9720 is particularly negative, and I don't see 9700 as strong enough support now that we've broken the trend line. So I think the direction is down for the dollar. Whilst talk of a rate cut by the Fed totally messed up my positions in the indices. They're helping our short dollar positions, so if you are long Aussie dollar, that's working. I think we should continue higher. We've stopped at the upper Bollinger Band, which is around 70.05, 70.10. I don't think that's going to be particularly strong resistance. So look for break higher, 70.25. There's quite a lot of trend line resistance up at 70.50, 70.60, but we're not particularly overbought. And if the stock markets can bounce back so well on taking the talk of a rate cut seriously, then the dollar, I would imagine, will continue lower on that basis. New Zealand dollar keeps going higher. We've hit 66.19, so longs are working here too, and again I think we should just hold on to it. 66.30, 66.40 would be a little bit of resistance, but not much. This is odd. The yen did not collapse yesterday. The yen is still holding up, so it's kind of weird. You would have, as the yen has strengthened so well with the decline in the stock markets, you would have thought there would have been a reaction and there would have been some yen selling. It's been a safe haven, so I don't really understand that. Euro also higher against the US dollar as expected. If you had managed to jump into longs on that break above 112.00, we reached a high of 112.77, which happens to be exactly the 100-day moving average resistance. We've come back a little bit. We'll need to hold above 112.40 to continue the bull trend, and I think we can do it. We're not overbought at all, so there should be some more upside. Clearly we're going to have to get through 112.80 for the next leg higher. So if you're long, that's the barrier that we need to beat. Cable higher again. We had that buy signal on the 31st of May, and the last 2 days have been bullish, of course. 127.03 was the 23.6% Fib resistance, so that's doing its job as we top at 127.14, and I don't think it's going to hold us back forever. So I'm looking for a break higher eventually. I don't know if we'll pause here for a day or two, but I think shorts are too risky, and I think we will eventually break higher. Gold, I'm still bullish, but I did suggest yesterday that we would pause because we were very overbought. I also said it would be too risky to enter shorts, which I still think, but I'm not surprised to see the market pause. You've got the buy levels on gold if we dip any further, but eventually I think this bull trend will continue and will push higher. So if you're holding longs, just be patient. Silver actually came down further than I would have expected it to, down to our buy level. So 1463 I think I had 1463, 1460 as our buy level. So if you weren't long, you got a buying opportunity there. But we bounced back really quickly, which doesn't surprise me. Obviously, as you know, I'm now a silver bull. We're going to have to get through 1490, 1495 for the next buy signal. I'm holding longs and I'm going to stick with it.